Okay, so is voice okay now? Sound is good. Can someone please confirm? Okay. Okay, so okay, sound is okay, perfectly. I can also see Vit here. Even my son has joined this stream. So hey Vit, uh, he's 10 years old and looks like that what he wants to be in the market's not really sure. It's a tough environment. Anyway, so let's start. Firstly, as always, with the dollar index. Um, well, the dollar, as you know, is still in recovery mode, and it's been the case since start of summer, I think. It's because of this inflation global problem still the case. Rates could stay higher for longer, but even some central banks still are on hold. So it could be quite interesting to see how they will fight the inflation. I mean, energy prices are higher, crude oil is higher, and if that's will continue, of course, they will maybe have to raise rates further. But on the opposite side of that, there is always a recession risk when you have inflation coming higher, when you have energy prices higher, when you have rates higher. So I'm sure that's one of the reasons why they are staying on hold. We have the jobs data this Friday, should be quite important release. I mean, jobs, if they will start ticking higher, obviously that could be the first step towards the change of the policy and that the economy in the US is slowing down. Now, looking at the dollar big picture here, we are still in this upward channel on a monthly basis, but since we stopped at the upper side, I think that there is a chance that market will actually turn to the lower side of this channel, maybe just a temporary test, and then we will continue to the upside, or maybe we will see a breakdown. I don't know what will happen, but what I know right now is that market has made an impulsive drop from that 2022 highs. So that's the 5 wave movement. So we are either going to complete wave A, now still testing some key resistance, or maybe we are already in wave C of a flat correction, which I have it here. So actually, nothing has really changed since our last webinar. We are still seeing dollar moving into the resistance. It can be close, but we are not seeing any kind of an important formation on a smaller time frame to make sure that wave C has ended. Notice that I will look now at the subdivisions of this recovery from that low. And the subdivisions shows very nice 5 wave movement. That's a wave 1, you had a wave 2, nice extensions with subwaves within wave 3, wave 4, and now looks like that we are trying to complete this wave 5 to the upside. Okay, so we are here. Someone is typing around for Bitcoin. We will take a look at Bitcoin later. So hey Paul, so I'm looking for more upside here, maybe in the near term, but it's start of the month, dollar is rising, start of the new quarter, so usually that's somehow I do not trust those flows. So I'm interested to see what will happen at the new highs. Maybe there can be failure break to new high and then a reversal to the downside. We have also Powell. I think it will speak about in hour or so, and we will see if this can provide some kind of interesting volatility here. But for now, notice what has happened recently. We have broken these March levels. Everyone was watching these March highs, and this is now trying to become a support. So I'm not sure if wave 4 could maybe become a little bit more complex here, or it's already finished. In either case, these subdivisions here for wave 5 has room for more gains towards 107.50, 108. That's the resistance area. But whenever we are going to see this reversal to the downside and out of this upward channel, let me make this black. That's when I think that we could start looking for a top, even if just temporary free wave drop. I still think that there can be plenty of room to correct this recent recovery that has been the case for the past few months. Okay, so watch out for potential limited upside. I still think that we are moving into some kind of extremes here regarding the sentiment, so we could potentially see a reversal in price while we approach to the final months of the year. Okay, also I will take a look on the US yields. Now US yields, same story like last time. We are in a fifth wave, but we have a pretty nice and extended impulse here above new high, while dollar index is not at the new highs. So if we are going to see a high on the US yields, that's when we could potentially see lower swing high here on the dollar. So everything is still bullish here, of course, but if suddenly, let's say, we fall back below this key important support here that goes back to October of 2022, and suddenly, let's say, we broke this trend line, then we will have plenty of evidences that we are topping out. For now, that's still not the case yet. Even the substructures here potentially showing one more lag here to the downside. You can see that I'm tracking on the US nodes, I'm tracking the 5 subdivisions within wave 5. Okay, so again, this month, maybe mid of the month, could be quite interesting. And as I said, because it's a new quarter, maybe flows will change, and this will help us to make new trends here going into the next trading for the next 3 months. Okay, now let's take a look also on the euro dollar. So euro dollar is coming to the downside, and notice that where we are coming back to these levels not seen from start of the year. So actually, if you try to hide the wave counts, you can actually see that market did not go far this year at all. We just have seen plenty of moves in both directions because of speculations, what central banks will do, and inflation, and so on. But now we are actually back at the starting point. So this kind of a starting point, January levels, are always, at least for me, are always very important because it's new tax year, and obviously a lot of new portfolio adjustment will occur at that time. And normally when you see prices retracing back to this area, again, you are at the same levels going back to the January. It means that could again play an important role here. So I still think that this could be a very sharp correction, could be a wave 2, could be potentially even flat correction, same as I discussed with the dollar index. So no matter how I look at it, I think that there can be some very interesting support here not far away. But still, we have to respect what the market is doing. We have to respect the subdivisions. Okay, so the subdivisions here into this wave 2 could still be counted as a free wave movement with sharp waves A, B, and C. And wave C is a motive wave. So I think that there is room for maybe for more weakness here in the short term after the correction, and then watch out for equality level or lower trend line support of this corrective channel here around 104. That's a very interesting support in my opinion. Also keep an eye on the RSI. If we will start to seeing divergence, that could be also the important indication that bears are losing strength. Okay, because notice that before that we didn't have a divergence. Okay, but normally when to complete the 5-wave cycle, normally you will see divergence at the end of the cycles between wave 3 swing and wave 5 swing lows. Okay, but that's what was not the case here. So that's why I'm thinking that you are now in a wave 4 and we could potentially see another drop here, but then possibly a pricing stabilization. Now let's take a look on on pound. Now pound, as you know, has been one of the strongest firstly here back in May and June, and one of the reasons is because inflation in the UK was still sticking to around 10% on a yearly basis, while in other countries in the regions were inflation dropping already below 6 or 7%. So that's why speculators back then believed that Bank of England should be more hawkish, and that was the main driver for pound strength. But now we have the opposite, okay, because the inflation was higher here now, obviously, and the pair came to the to the upside. Now, obviously, if inflation is coming to the downside, especially next year, it means that pair has a lot of more downside potential as well when we are looking at prices. So here, I think that we could be in a wave, in very sharp corrective drop still. We are currently at the mid levels here when looking at these corrections that was back in June 2000 and in July 2022, and we had some similar wave 4 here, but on the opposite side of the trend here, going back to the start of the year. So definitely that's a very first important level. It's also the 38.2%. But I think that much more important could be the former wave 4 here around the 50%. So 1.18 still potentially can be retested. Keep in mind that even the subdivisions within this wave C should be all in place before we can say that market is coming to an end of this correction. And if you look closely here, we even had some extended and sharp drop over the last 2 weeks, and it came after the Bank of England decided to stay with rates on hold. Okay, so what we are seeing now is a even stronger acceleration to the downside. So in my opinion, that's still ongoing bearish impulse for wave C. So watch out for more weakness here. Maybe wave 4 has already ended here and you're now in a fifth wave, or that's still going to be in an extended wave 3. So no matter how I try to label it, I just think that any kind of a bounce back towards 2270 or 123 level could be very important resistance for this pair. Okay, so watch out for potential further weakness here after a corrective wave 4. For a change in trend, okay, you definitely want to see sharp impulsive turn, probably and close to 125. Okay, that would be the main reversal. But for now, it's still, at least in the short term, it's still a downtrend. Now let's take a look on Aussie and Kiwi. Gold disappointed me. Well, not sure if you were with us recently. We have been looking for gold to continue to the downside, and I will definitely update it later. Now let's take a look Aussie and Kiwi. Now we have interest rates decision from Australia and New Zealand. The expected rate decision from Australia is 4.10%. Kiwi on hold 5.5. So both are expected to stay on hold. Okay. Market see less than 10% probability for a rate increase. So obviously, if they would increase, it would be very sharp. It could cause a very sharp reaction on the markets and the positive side of Aussie. But because everything was set that they are probably going to stay on hold, I think that even if they will stay on hold, markets may not move much. I think that it could be more volatile in connection with dollar Chinese yuan, that I will also share in a second. So firstly, Aussie, it's testing a very important big level here at the 78.6%, but we also have slightly lower than the recent swing low. It's the wave C that equals to wave A. Okay, so still we are at the key levels, but it's very hard for me to say that we are bottoming, because when looking at the 4-hour time frame, notice that this trend line resistance hasn't really been broken yet. So it looks like that was a temporary shock to the upside for the end of the week, end of the month flows last week, and then we have seen a reversal. So that's not a breakout, it's the failure breakout, and I think that it can actually lead to a new further weakness here for the Aussie. So actually, as long as we are below this trend line of resistance and this very important bullish level 65.24, I just cannot rule out potential more complex wave 4. So that's why I see on my chart, some of my charts, these alternate labelings representing what may happen if we are not seeing these bullish levels broken. Okay, so just be aware that there can be maybe another move to the downside here for the Aussie, and could be a little bit too soon if you're more like an intraday trader to call a bottom and look for potential long ideas. At least for me, that's not the type of the patterns I would watch for. Now, I definitely want to see more price data to make sure what's going on. Also, since I mentioned dollar Chinese yuan, you can clearly see that dollar Chinese yuan is still sideways. Okay, it's consolidating. And what I like about this one is that we are still holding this level for below 2022 highs. So I think that that's ongoing impulse, right? And if this is an ongoing impulse, then we know that the previous drop was corrective. So this correction should be then fully retraced, and we still haven't seen a push above that level. So that's why I will continue to stay on the bullish side here and expecting break to the upside into wave 5. And this potentially, as you know, means that Aussie could see more weakness. Notice that Aussie here, we just try to ignore the wave structure. Just from a simple technical perspective, it's trapped in the range. Okay, so that's why I don't want to say that this market is bottoming unless the 65, 50, 30 resistance is broken. That would be the different story then. Okay, but for now, if this is the consolidation and we will see a break to the upside and then maybe later a reversal in a few weeks, of course, at least in the short term, Aussie could stay weak then. Now let's take a look also on Kiwi. Yes, thanks for support, Julian. I definitely want you to see that you support us. Press a like button, subscribe to our channel, leave us a comment, and make sure that I will make more of those webinars for free in the future. Okay, now let's take a look on Kiwi. So Kiwi, again, I think that is testing some very interesting support levels here. We have the 61.8%. Looks quite interesting level for potential bounce by the end of the year. Maybe 2024 we could see much higher prices, because the rise here from October of 2022 clearly unfolded as an impulse. So if that was an impulse, right, then we know that this should be a correction, and correction should not fall below the starting point of this impulse. So as long as we are above that level, I will continue to look and expect a reversal to the upside. But of course, firstly, we have to see some kind of a top formation with confidence on dollar index, which is not the case yet. In fact, even Kiwi here on the smaller time frame has not at least now did not unfold in 5 waves. That's actually still a 3-wave movement. Okay, we failed actually at this upper channel. We fall back into this below that trend line. So in my opinion, this still could be a corrective rise, or for a bullish case, we definitely have to see sharp move to the upside by the end of the week and see a closing around 6100, around 161.8%. Okay, then maybe I could say that we are bottoming. But with this kind of a price action here, I just cannot say that we are bottoming, simply because we just temporarily passed these resistance levels and now we are falling back into this range. Okay, so just poor basic technical analysis is not showing any kind of a bottom here, especially not from Elliott wave perspective. But as I said, maybe in 2024 this could be still quite interesting for our reversal, but firstly lower levels can be retested. Okay, let me check my list here. We also have, not we, but in New Zealand, they have an election in 2 weeks. So there's a risk that Bank of New Zealand will not deliver any kind of a new signals regarding the policy, okay, their policy decisions. So this is also something to consider. And maybe this could shake out both sides of the markets until then, until we get these elections over. So let's take a look on dollar yen. Now, dollar yen, as you know, is trading at very interesting levels. Bank of Japan also is saying that they are watching the FX very carefully. We know what that means. It means that there is a lot of risk on the table, especially if you're maybe long, that who knows, maybe they will when they show up, and they will try to send this market to the downside, cause a reversal. But even if there are interventions, there can be just a temporary reversals. So it's a pretty dangerous game at this stage with this rhetoric and at these levels. But from an Elliott wave perspective, we have a very nice and clean 5 waves to the upside. Okay, plus you have this current fifth wave moving with 5 subwaves out of a triangle. So from an Elliott wave perspective, sentiment perspective, looks very interesting. Also for a potential top. Also, we have a divergence here as well. But now as a trader, okay, maybe as a trader, you won't firstly see that market start turning to the downside before saying that that's a top, because you never know how far can fifth wave extend. Of course, if you still want to be one of the few that will short this market, then obviously you have to adjust your position size accordingly. It's definitely a different story if you wait on a top first. So for me, it's important, and what we share with members, it's important that we wait firstly on a 5 waves down, because 5 wave drop, let's say back below 148, 147, even better, would make me think that market has stopped, and that's when you could start shorting pullbacks. But for now here, still option exists to short this market, but definitely there is a greater risk because you never know how far the fifth wave can extend. But that's definitely the first interesting resistance here around 150. Okay, so definitely I have this one on the watch list for sure. Now let's take a look also on dollar Mexican peso. So I've been talking about dollar Mexican peso also in our past meeting. I said that we are going to expect further weakness here on dollar Mexican peso whenever, if we are going to see dollar stopping at the resistance. Unfortunately, this wave 4 turns out to be much more complex than I firstly thought. So I was wrong here. Firstly, I thought that we are going straight to the downside after 3 wave rise, but looks like that now we have something more complex to deal with. Could be even a leading diagonal for a wave A, could be a WXY recovery, but still 1800 is a very strong resistance. Above that, at 1830, you have the 38.2%. Notice that the previous swing lows comes in around that area. So why I'm looking this to be a very strong resistance is because this was the extension here within a fifth wave. Okay, and whenever you have the fifth wave extended, price can stop at the bottom range of the previous wave 4 rather than at the top range. Okay, so that's why I highlighted this as the first key resistance area. Looking at the 4-hour time frame, since I mentioned that we could have potentially a WXY formation, so that's an ABC, wave X, and another ABC, so watch out this resistance here. We have seen a pretty nice sell-off at the end of last week. We could maybe be headed towards the lower side of this channel, but eventually we will remain stuck in this corrective rise as long as we are trading above this wave X. Okay, so for now I will wait these higher, better levels in my opinion. Now what I have left here, Euro Aussie, Pound Aussie. Now I didn't pay a lot of attention to those crosses when we were in this rise. My assumption was and still is that we will face the major reversals. And what's interesting about the Euro, Aussie, Pound Aussie, those kind of pairs is that, of course, Aussie, Kiwi, all of those currencies, and whenever we are seeing a reversal of the dollar to the downside, those currencies can do much better than the euro, especially when you have the risk on flows. Okay, but what's interesting that for now we do not have the risk on flows yet. We are in a pullback on stocks. Okay, but if stocks would stabilize and bounce, I think that Aussie and Kiwi, especially if economic activity will start improving in China suddenly, who knows, maybe in 2024, I think that then Euro Aussie, Pound Aussie, those pairs, or versus Kiwi even better, maybe will fall even lower, okay, after recent reversal. So I think that we could be dealing with a pretty important, interesting breakdown on those pairs going into the next few weeks or months of trading. Okay, so here is Euro Aussie potentially trying to break this trend line. We also see some impulsive characteristic on an intraday basis. We are definitely important level, cannot ignore that, going back to this 2021 highs. But if we can break below that trend line, and let's say we see close weekly daily close below 163, which was the recent spike low, then I think that we are headed much lower, and there can be opportunities on the short side. If we take a look on pound Aussie as well, here also we are already breaking this channel, and looks like that we could maybe even completed wave E of a higher degree triangle. But watch this structure, it's very strong. It does not look like a correction in my opinion. So I am aware of more weakness, but those pairs will have will be much easier to move to the downside when we'll have Aussie and Kiwi bottoming. For now, that's not the case yet. So Aussie, those commodity currencies, commodity pairs, and also stocks will be very important to track whenever you are trading these crosses. Now let's take a look on crude oil. My pleasure. I'm not sure how to spell this. Kumar Devendran. Thank you. I hope everything is right. Okay. So crude oil. Crude oil is in a recovery mode, as I said last time. It has a positive correlation with the dollar because of the inflation. So it's not different. It's not the same economic cycle like when we have crude oil coming to the downside and the US dollar higher. So this time is the opposite. Now looking at the crude oil again, I have it here, the big picture, still think that we are here in a corrective phase that could test lower levels. So I think that we will see crude oil coming to the downside whenever, maybe if there would be some recession, because then there will be no demand, or maybe they will be successful fighting the inflation. Okay, so I will be expecting further weakness after this wave B is completed, but for now this wave B looks like that could be a little bit longer than I firstly thought. So for now we are still tracking this wave A, the first leg of this corrective rise that could continue towards 61 if not 78.6% FIB. But for now, I want to focus on this substructure for wave A. Okay, so wave A is a motive wave. And notice that we have a pretty strong, steady rise for the last few months. And clearly, because of no overlaps, I think that that's an impulse. Okay, this is how I always want to look at the markets. Even if previously I thought that the whole corrective rise will top out somewhere here around $90, well, I just have to respect what the market is doing. If that has an impulsive characteristics, then I have to label it as an impulse. Okay, but even these impulses obviously will have some setbacks, and we had a pretty nice moves to the upside recently. But notice that now, when there was a lot of talks going around this inflation, that there's still a main problem, blah blah blah, and the sentiment was a little bit over optimistic regarding further potential rise in crude oil prices, energy prices. That's when I would expect that we are seeing a new pullback. So looking at this price chart, I think that we could potentially having a top here for crude oil, and that we could see deeper levels here into wave 4. So I will be looking only for a temporary pullback. Okay, the first support is around 88, the deeper one is at $83 per barrel. So since wave 4 could be the same degree as this wave 2, obviously there is a plenty of time for this correction to unfold, and could be quite tricky because not all corrections are just simple like this one was here in the middle. Okay, so that's for crude oil. Now let's take a look also on gold. Okay, so on gold, the price is coming to the downside. We have been talking about gold metals in the past. We said that we could potentially see much more weakness because we identified a triangle here for a wave B, and you could see a very strong break to the downside, approaching our projections here around $1,800 per barrel. Per barrel, per ounce. Watch out for more maybe near-term weakness. But what's interesting is that the subdivisions here within this wave C are already in 5 waves. Okay, but you never know, as I said already earlier, how far this fifth wave can extend. Okay, so watch out for the intraday price action. By the end of the week, we could potentially have some interesting reversals and opportunities if we are going to see a reversal. Because if we see, let's say, 5 waves up on an hourly time frame back above 1860, that could be first interesting price action that will tell us that we are bottoming. Okay, but for now I'm just observing what will happen up down here, because you never know how far this whole structure can extend. But I can see that there is some fear going on metals. I'm not seeing a lot of buyers there, so I'm prepared for it. If we are going to see a bounce, definitely we'll look for potential longs here against the low that will be in place by the time. So for now it's still a downtrend, but what also it may be important to highlight is that we came out of a triangle, and we know that triangle cannot occur in a wave 2. So saying this, that we are in a wave 3 of a very aggressive bearish impulse, would probably be the wrong interpretation. So I'm looking this to be a triangle in a wave B, because triangle occurs prior to the final leg within the higher degree structure. So you are now in this final leg, and you have this wave 4 swing support. Normally, if you will read the book by the Elliott wave principle, you will see that higher degree corrections can stop at important swing highs, swing lows, and these are usually at wave 4. Okay, so you have also the 61.8% here as well, which is also very important level. So I think that it could be quite interesting period here in the next few weeks, if we are really going to see maybe US yield trying to stop, come to the downside, then metals could benefit from that. Why? Because I think I shared already this one in the past, because here you can see that rates, here is by the way the 2-year rates are higher. Okay, but if we are at the end of this cycle, and then we will see potentially interest rates coming to the downside, then gold, metals in general, in my opinion, can explode to the upside, because they are already doing quite well, metals in general, despite US yields being much higher. Okay, now let's take a look on DAX. Okay, so German DAX came to the downside. We also covered this one. We mentioned in our past updates that that was potential wedge, retested from the lower side, from the outside actually, and then we have seen a continuation to the downside. Now, what's good about potential bullish price action, okay, is that we could be at the end of wave C. Okay, you tested the 61.8%, and the move came out of a triangle. So maybe this week could be quite interesting. If we pass this level at 15,500, I think that we could see more upside. Okay, as long as we are below that swing high, just be aware that there may be the quality level of wave C compared to wave A can be even more important, around 14,800. The 15,000 is also a very important level. So the whole corrective cycle is testing the first supports. The dippers are a little bit lower, but I still think that for now this can be a 3-wave drop and not any kind of a new start 5-wave drop. Of course, I can be wrong, but then I have to see a decisive break below 14,500, which is still, in my opinion, very, very interesting support if you look here at the past swing highs and swing lows. Okay, now let's take a look also on the S&P 500. Okay, Just a second. Okay, so the S&P 500. Someone is asking what the hell is going on with Bitcoin. Well, it looks like the cryptocurrencies are trying to stabilize, and we were looking for this, and looks like that there is a lot more upside potential, and I will look at the Bitcoin a little bit later. Okay, now before we go to cryptocurrencies later on, I'll definitely want to cover the S&P 500 as well. So I will bring on this chart because I think it's a pretty straightforward and very clear. Okay, so always when I try to label the potential recovery or an uptrend, I will try to use the trend lines. Okay, and notice that we are currently this trend line on the S&P 500 going back from October of 2022, from a year back. So it looks like that's a very interesting level. Not only the trend line, we have the gap fill here. Okay, also it's the start of the new of the final quarter of this year. Okay, then you have also the seasonal charts here as well. Okay, you can see that for whenever the September has been a bad month, like it's been the case this year, the October has historically been doing quite well. So I think it can be quite interesting reversal, because after all, in Elliott wave terms, you also have three waves down, A, B, and C. Of course, saying that we just bottomed last week, it's maybe a little bit too soon, because looking at the 4-hour time frame, notice that I'm tracking a zigzag here. It's a 5-3-5 pattern. Okay, so that was wave A, that was a 3-wave rise for a wave B, and now then we should see a new 5-wave movement for a wave C. So I think that this can be now correction. Also, as I said earlier, it's start of the new week, new month, new flows, and this will not maybe allow just to buy S&P 500 here, put the stop loss here, and we go straight to the upside. I think that there can be some both-sided traded for now to clear some stops out, to try to find the fair price, at least for this week, and then maybe we try to reverse to the upside. So I would be looking for more short-term weakness after this wave 4 rally. Now, very important resistance is definitely at 4,400. Okay, daily, weekly closes above that level. Say we finish the Friday up here, I think that we are bottoming. Okay, but for now it's a little bit too soon. Okay, can still be this ongoing wave 4. Also, let's say regarding some kind of alternate scenarios, let's say that this is a wave 4. Okay, then we know that market should not fall into territory of a wave 1, right? And that's at 41.78. So if this trend line will decisively be suddenly broken, and that I'm wrong, that this is not an ABC, and we overlap this wave 4, then obviously I will have to adjust the wave counts. And in such case, I think that this, unfortunately, this higher degree wave 4 will keep the prices and the whole price action a little bit tricky, most likely trapped in some kind of a triangle or whatever. Okay, and that we will arranging here for a while. So I think that the next few weeks will be very important for stocks in general. Okay, are we going to see new highs, or are we going to stay trapped in a range for a while? Also, maybe it's not bad idea occasionally to look at this chart. It's the equal weighted ETF. RSP is the ticker. Okay, this will give you maybe even better picture of what really is going on with the stock market. Okay, if you're seeing this market just sideways and then the major index trading higher, then keep in mind that only a few stocks are driving that index. Okay, but for real risk on flows, you want to see that whole stock market will at least to some degree move to the upside. Okay, so here it looks like that we could be in a triangle, maybe an ABCD pattern still unfolding. So still, as I said earlier, if even major index will break that key levels, I just think that we will stay in this range for a while, and maybe we'll have to wait on potential breakouts late in 2024. Okay. Now let's take a look also here. We have maybe the NASDAQ 100. This looks like a very clear pattern here. We could be in a wave 4, okay, but even wave 4 should have all subdivisions in place. If you look closely here, just to label this wave count for you. Let me, okay, that could be wave A, wave B, and you are now in wave C. This could be blue circled, okay, and looks like that this still could be ongoing weakness. Okay, notice that why I'm looking for more potential weakness here is because we just retested those swing lows here. Okay, and not really having any kind of a strong conviction here that we are just bottoming. So maybe that's still wave 4. I would love to see more decisive break to the downside to make sure that all of the stops down here are cleared, and that then we reverse towards the end of this week. But if suddenly, let's say, we rally back towards 15,400, then the whole pattern here starting back in July can be even kind of some kind of a more complex correction, but still maybe part of an uptrend. Now, also looking at the Russell 2000, if you're looking for any kind of a investment on these small caps, well, Russell 2000 definitely it's not looking good. If you're familiar with the Elliott wave principle, at least to some small degree of knowledge, then I'm sure that you will label this as a potential first leg, pause, and expecting the third leg, right? So for me, this is really not looking bullish. Okay, so watch out this maybe to print lower prices, and then we could stabilize maybe later this year, next year. Okay, but definitely with this type of a structure, this is not looking good. I think that wave C is still missing here, but it's one of the weakest compared to Nasdaq, S&P 500, and other indexes, obviously. Okay, now let's take a look also on Bitcoin and the Ethereum. Okay, we had pretty interesting reaction on cryptocurrencies over the weekend. It's promising for new month here because it means that actually we have seen firstly a bounce on Friday and then some stabilization last week, and then actually market was able to hold those supports through the weekend. Okay, even when we had some major risk off moves, cryptocurrencies in general were doing quite well, and you can still see a very strong interesting support here going back from August of 2022. Okay, it's been here a resistance, then major break higher, acted as a support. So this looks really like a textbook. Okay, so I thinking that this could be a flat correction potential already completed, and that we can see more upside. Of course, to make sure that that's really going to be the case, watch and observe the substructure on a smaller time frames. For now, that's still a free waves to the upside, but notice that price is currently testing the upper channel line, potential resistance. Okay, that could be resistance if the recovery would be ABC, but if recovery is impulsive, then this one should be broken. So if you're not in the market yet and you're looking to buy with some short term setups, then I think it's better to wait on something more upside here for a wave 3 and then hunt pullbacks on wave 4. Okay, because you never know, this could be an ABC rise and we will see move to the downside. So now it's the key point right here, okay, that I think will give us a lot more evidences of what really is going on in the next few days. Okay, but I am expecting more upside for sure here, in general speaking, on cryptocurrencies. Okay, now also looking at the Ethereum, obviously very similar price action here. For now, recovery from the lows is still in three waves, but if we can hold these gains and maybe even rally towards 1800, I think buying pullbacks could be quite interesting. On the opposite side of that, if suddenly we reverse back to the downside and erase all of those gains from the past few days and break this 1600 level, then I think that new lows will be seen. But even if new lows would be seen, I still think that this drop here, this movement from April highs is corrective. Okay, and that we will try to stabilize on cryptocurrencies. Okay, traders, that's it. Let me go through very quickly here. We have plenty of comments today. Very good. So once again, if you're first time visitor, make sure to subscribe to our channel, to press a like, leave us a comment below this video, and I will make sure to make more of those videos in the future. Okay, traders, good luck and trade well. Bye.